Silver's price is holding firm, and I believe this is a good reason to celebrate. I'll explain what I mean in this video as we explore. Yes, silver's price did not fall below where I thought it would into this massive dump that we've been seeing in the precious metals markets in general, but silver in particular. I thought maybe we might see it fall back into the $47 or maybe even $46 range. But it's holding firm, and I believe that we're going to see a holding pattern for silver that is a good reason to actually be happy as opposed to lament that we're not at $50 silver again. I'll explain a little bit more about that later in the video. I want to thank Summit Metals for sponsoring the channel, for a great selection of products and excellent customer service. Check them out by clicking in the link down below. Now, over the past year, we've seen the futures for gold surge about 60%, according to David Urphy over at Kitco, into a Monday all-time high of $4,398. I don't know if that price is actually accurate or not. I don't think it got quite that high, but it marked its strongest rally in decades as investors piled into gold amid economic and geopolitical uncertainty, along with a steady erosion of institutional trust around the world. And that's the thing about gold, is it tends to kind of hold the ground more so than silver. But I think silver is setting itself up to kind of sort of draw some battle lines here. And we're going to get into that here, exactly what I mean and why. We're not necessarily at a point where I believe we should be looking and hoping for $50 gold or silver again within the next week, but I believe we're going to see a consolidation period. And you know, this is essentially what is being referred to as healthy correction as we head into the Fed week. In other words, the Fed is going to be meeting to lower interest rates. And so with that, we've got this big plunge in gold that was the steepest single-day decline since 2013. It did tumble over 6% at one point, and it dragged silver and other metals down with it. Silver got hit especially hard, and it's sort of an unknown period of choppy, highly volatile trading that is driving away speculative bulls and bears in the futures market for fear of them getting whipsawed after the CME raised margin requirements on gold futures by 5.5% and silver futures by 8.5% last Friday. And the abrupt downturn via panic long liquidation and margin call selling in the futures market has rattled some investors. This overdue correction of recent outsized gains is a healthy and inevitable tactical retreat following a period of sustained and aggressive gains, and it certainly has been. And I've mentioned many times in this channel that we were spoiled with this big bull run and knew that we were going to see some sort of correction at some point in time. But now I want to look beyond that and see how this all plays out in the long run. And even in the medium term, I think we're going to be relatively happy, I believe. Now, I could be wrong about that. After a blistering 70% rise year to date, a 7.2% downdraft in silver from an all-time high of $54 per ounce last week marked its largest daily net decline since September of 2011. We had silver had entered into backwardation in early October amid very short supplies in the metal in London, driving prices there significantly above those seen in New York. The supply squeeze was a major catalyst for silver to break out to an all-time high above a 45-year resistance at $50. The silver Magnino line of resistance was destined to be a battlefield as the metal reached a price area where paper traders test conviction, producers hedge future output, and nervous longs lock in those profits. After a significant week of metal shipments arrived from the U.S. and China over the past week, the massive influx has alleviated the physical shortages and brought the backwardation down to about a 20-cent difference. We're still in backwardation, but not by much now. This increase in physical metal at the LME contributed to lowering both spot price premiums and short-term borrowing rates. When combined with last Friday's CME 8.5% increase in margin requirements, this set the tone for some heavy profit-taking and take the silver price down below that key $50 an ounce mark. When the dust barely settled and the recent supply squeeze in the silver market, zinc had continuing flowing out of the LME warehouses, leaving just 35,300 metric tons, barely enough to cover one day's worth of global consumption. Arrivals have been minimal despite the widening premium for cash delivery. So that's what's happening there. So all metals have kind of been affected by this in some way or another. Platinum, another one. Massive move in platinum prices. And we're seeing it surge and pull back. Very volatile there. In fact, as I look at the markets today, platinum is down $22, over 1.3%. Palladium down over 2%. And even rhodium got hit a little bit today as well. But overall, silver is doing okay. And moments before these markets close, it is now sitting at $48.58, down 39 cents. Not a massive smackdown today. And I think that is because even though we're getting some inflation numbers that are a little bit less than what they had expected by 0.1%, it's still 3% inflation, which is a 1 full percent higher than it should be. Inflation is sticky. And there's still problems there. Government is still spending more than it has than to take in, and it's a shame. We really do need to cut government spending. That's really the bottom line there. In that, I do agree with some of the deficit hawks out there, and there's not very many of them, by the way. Notwithstanding, this is a situation we find ourselves in. Inflation is sticky, and it is still outside of what the Fed wants and what many of us want. In fact, honestly, it shouldn't even be 2%. But the Federal Reserve likely, and of course, according to the latest statistics that I've just checked recently, it's unchanged. 96.7% of the probability that we're going to see a quarter point rate cut next week for the 29th of October meeting. And then on the 10th of December, another quarter point cut. 92.2% believe that's going to happen. So we're going to get a half point cut. Do I think that's going to raise silver and gold prices? No. Or not by a whole lot, maybe a little bit, but it's going to prevent them from falling much more than where they're at right now. This is part of the battle lines that are being drawn for silver, and I think that it will hold. And what do I mean by that? We may not necessarily see silver reach back to $50 an ounce when the Federal Reserve cuts rates by a quarter point. It is possible. I'm not ruling it out. But even if we don't, I don't think we're going to see it fall much below $47 an ounce. I think that's going to be the new place. We're going to watch and see it hold the line there at $48 or $47 to $48 range. And that will be very, very good, by the way. The longer we can hold above $45, I think we're going to start to see the solidification of silver support heading into 2026. And then I think we might see the prices creep back up again, and maybe we'll see $50 again in 2026. And again, I'm not ruling it out between now and then, but with everything coming back together and normalizing with the London market and some of the supply chains, most of the premiums we're going to see because more people are buying silver. And as I have talked about recently, that's actually a good thing to some extent. It's good to see more people buying. And I think in all honesty, even though about 25% of the silver market is related to bullion products, I think it will put some pressure because there's already a deficit in silver for industrial uses and photovoltaics, solar, which is solar, and also EVs and data centers, all sorts of different areas where there's massive amounts of demand that likely will be recession-proof for a lot of it, especially in the biomedical field. So those are things we're watching with silver, and I think that the fundamentals remain strong for silver to test that $50 range, if not before 2026, certainly after it, there's no question. And it seems like that as people buy more silver or at least hold on to what they have, I think that's going to put more pressure on them, on the market in general. And that's going to bolster up silver's price and keep it from falling much more than where it was. And I think that would be the ultimate victory, I think, to some extent, to think about silver maintaining a price above $45 an ounce. is for an extended period of time. In other words, if silver holds the line at $45, $46, $47 an ounce, it may be boring to many of us, but hey, these are sustainable numbers that are entrenched and will probably lead up to the next bull run for silver or next mini rally that could retest that $50 an ounce mark that could set it up for the next stage, which is a $50 bare minimum. But there's going to be some fight. $50 is a strong number, and it's a strong psychological number. There's going to be some resistance there. So that's something we have to think about too. What I like to do on this channel is bring you the latest news in the world of precious metals and analysis. If you enjoy what I do here, I hope you will consider subscribing to the channel. So with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch and to encourage you to please rate, share, comment, and subscribe.